Welcome to the India FinTech Diaries, the only podcast focused exclusively on the Indian fintech market. I'm Elroy.
And I'm Hemant. In each episode, we dive into the latest trends, ideas, innovations, business models, and personalities that are shaping India's fintech landscape.
We also invite amazing guests who are innovators and industry players that are driving the change that is helping make financial services more modern, innovative, and inclusive in India. Come join us as we explore the changing landscape of fintech in India.
You're listening to India FinTech Diaries, where we break down the tech, talent, and tectonic shifts driving India's fintech boom. I am Hemant.
And I'm Elroy. On today's episode of India FinTech Diaries, we're diving into the world of fixed income, a space that's exploded in relevance as Indian investors look beyond the traditional trio of real estate, gold, and mutual funds. One platform that's been at the forefront of this shift is Jiraaf, which is on a mission to bring fixed income opportunities to investors. And joining us is someone who's lived this problem from the inside. I'm pleased to welcome Vineet Agarwal, co-founder of Jiraaf, to the show. Welcome to India FinTech Diaries, Vineet.
Thank you, guys. Thank you for having us in the show.
Awesome to have you, Vineet. Vineet, before we dive into Giraffe, we would love for you to share a little bit about your path, how your experiences across banking and financial services shaped the idea that became Giraffe, and of course, talk about this unique name that you got for the company.
I started my career in a financial and banking space. Started with a large corporate team of Axis Bank, and that stint gave me exposure of working with a lot of startups and a lot of large corporates as well. Okay, and post that I moved to a private equity NBFC setup where I worked for almost 8 years. And that stint, we had different pools of capital. So we had our own fund, we had our own NBFC, we had prop money. I was managing close to $1 billion there plus and did all sorts of structured transaction. And during that stint, I've worked very closely with a lot of large family offices of the country. And I saw that, these guys don't invest their money like what we generally tend to invest, right? So for example, what we tend to do is that once we start earning, the first thing that we do is that we'll start doing some sort of an SIP. As we move ahead in career, we buy a house for ourselves,
Right.
and in between we'll be buying some sort of gold for family usage. Once you start earning more, you repeat the cycle. That is, you'll buy more mutual fund, you'll buy one more house, and you'll maybe buy more gold, right? But these large family offices, I saw that almost 40-50% of their capital was invested in fixed income securities. Okay, because that is one asset class which is not linked to the market. Okay, it gives you predictable cash flows. So all those things were there, and when I deep dived into that, I saw that retail people do not have access to that. So that was something which was on my mind ki, there are so many great products available, and people like us do not have an access to that. And if there is a platform which could be created where we can go and buy these products with the same ease like you buy a share or you buy a mutual fund, then that would be a great addition to the portfolio. So this was the thought, initial thought behind starting Giraffe. In fact, before starting in my previous company only, I did a test transaction. It was a 20 crore kind of a transaction, which was only open to the employees of the fund where I used to work. Okay, so almost 100 people came together. We participated in that transaction. Everyone was happy that they were getting an opportunity to invest. Okay, and like the minimum ticket size was not like a crore, which generally used to be,
Right.
like 5 years back. And anyone could invest 1 lakh or you could invest 10 lakhs, whatever the corpus you have. And once we got our money back, everyone was happy that they got an opportunity to do something like this. That is where I got a validation for the idea ki, maybe a platforms like this should exist.
And Vineet, how about the name of the company, Giraffe?
Yeah, that's an interesting one. So see, when we were starting this, honestly, one of the first name that came to our mind was Pi.com. Okay,
Right.
Pi stood for like passive income or passive investment sort of a name we were thinking. But the URL for that was like $1 million, and when you are starting your company, you want to save everything that you have. And while Saurav and I, he's my co-founder, when we were debating the name, somehow giraffe came across. And the one thing that we could identify with the animal giraffe is that the animal by itself is slightly exotic. Okay, it has access to the leaves and fruits of the forest, which no other animal has access to, right?
Right.
So our idea was that in our platform, you will get investment opportunities where which is very, very exclusive, which is exotic. You will not get that anywhere else. And so all of that came together in this name. And we didn't want to have a finance heavy name because yeah, what we felt that inherently the product itself is slightly complex. If you add a name which is even more complex, we didn't want to have that barrier where people don't feel that inhibition to come to the platform. We want to have a name like an Amazon, where tomorrow if we have to do 10 other things within the same brand name, then we could have done. So these were some of the guardrails which we kept and just decided on the name then.
Got it. Very interesting. Vineet, over the last decade, India's bond market has expanded at a CAGR of around 25%,
Yeah.
with growth accelerating over the past 4 years as both corporate and public sector issuers increasingly turn to debt markets
Yeah.
to meet their funding needs.
Hmm.
But Vineet, what we saw that the retail participation in the market is increasing, but still is at about 2 to 5%, which is significantly lower than the developed countries and developed markets where retail is at about 15 to 20%. So, if you could
Absolutely.
help us understand what's the reason for this gap and what structural changes might help us address this.
No, it's a very pertinent question. We'll have to go back to a little bit of history to understand this nuance. So, see, if you take India as an example, also, equity market actually started say in 90s.
Right.
Really, it started. Although stock market existed before that, but the boom, if I have to say, started post early 90s, right? And 2000 2005 is when mutual fund started. And if you see even stock broking, or which is the equity broking business, started post 2015-16 only, right? So what it shows is that every decade or so, as and when the country matures, you will have one or two new financial product which comes into the ecosystem, and then that product becomes mainstream in the next 10 year or something. Like
Right.
if I ask my father, okay dad, why didn't you buy a mutual fund in 2005, 6, 7? If you would have bought, maybe I didn't have to work today. Right? The logic that I get is that Vineet, I didn't understand what how mutual fund works. Okay, because they used to combine 10 shares, tell an NAV, and I didn't understand how the NAV works. So even today, if people are doing SIP and if you ask them that do you know how NAV works, the answer to that will be, and I don't know how NAV calculation is done. But still, the moment they start earning, they will start doing an SIP, right? The logic is that the product has become mainstream. Similarly, we feel that around 4 5 years is when the fixed income as an ecosystem started in India. Okay, it in next 5 years or so, we have already started seeing the trend where the product has started gaining momentum at a speed which is faster than any other traditional product, and it will become mainstream. Like you said, in a lot of developed economies, the product is already mainstream. In India also, the product will become mainstream, say in next 3 to 5 years. Okay. One of the main reason why it has not yet become was because there were no regulatory platform available for the product to
Sure.
become mainstream. So in fact, when we started Giraffe in 2021, and we went to SEBI asking them, ki, is there any license that we can get? Because this is the kind of business that we want to build. They did not have any license then. Okay. So what we understood is that, okay, let's start building. There were a couple of other platforms who started building along with us. And then obviously all of us were in constant touch with the regulator, asking them to give us some sort of an identity as a business. They came up with a regulation and a license called as online bond platform license in late 2022, early 2023. And now then the entire business is getting an identity from a regulator. So today we have a regulation, we have a license for doing this specific kind of business. And slowly all the ecosystem players are also building technology. What we have seen was the success for say mutual fund or for equity as an asset class. All those things are getting built for this as an asset class as well.
And Vineet, as you said, the regulatory identification of a particular
Hmm.
license came in. I'm
Hmm.
sure the digital rails are there, but they are also maturing. So, from your
Yes.
perspective, do you see India's bond market also following the similar trajectory as equities?
Hmm.
That means as the digital rails mature, the retail participation will explode.
100%. In fact, I would like to thank the regulators actually here, because they have been very, very proactive in spending a lot of time and effort in building this as a sector. In fact, almost a month back, we had a event called as Bond Conclave.
Right.
It was done by SEBI, NSC, and BSC, where they had invited all the chairmen of these three organizations, almost all mutual fund players, MDs and CEOs, and obviously it was for the players like us, online bond platform providers, where they came up with a slogan. Like, you have a slogan for mutual fund, which is mutual fund sahi hai. Okay, SEBI came up with a slogan called as Bond Ek Sasakt Bandhan, and they have in fact made like 5 or 6 advertisements which is entirely sponsored by them. They are running those ads across multiple platforms. They are spending that capital to bring awareness about this product in the retail category. Next 12 months, in fact, they are doing a 100 city road show. SEBI, BSC, and NSC, they are doing a 100 city road show to increase investor awareness about this product. So obviously, there is a lot of support from the regulators, and the entire ecosystem is coming up, like NSDL, CDSL, CBRICS. All of these organizations are also stepping up. They are building technologies so that they provide exactly all the features which is available for, say, an equity and mutual fund today, should be available for bond as an platform as well. So at a macro level and at a government level and a regulator level, there is a lot of focus on this as an asset class.
Vineet, let's shift the focus a little to Giraffe now, right? For our listeners, can you explain to us what Giraffe does in very simple terms? Maybe you could talk us through a user's journey to the entire investing life cycle on Giraffe.
Sure. So see, at a product level, it's a very, very simple product. Earlier, what you used to do was that as an individual, we used to put our money in the bank.
Right.
Bank used to give us some return. And the way the bank used to generate the return was that they used to invest that capital in the form of debt to multiple companies.
Correct.
And as an individual, the only option we had is that we could buy shares of some company. Now let us take example with some names. For example, if you have to buy a share of, say, Tata, okay,
Yeah.
you as an individual, you could go and buy a share of Tata, or buy a mutual fund which has equity of Tata. Now suppose you want to give a loan to Tata. Say you want to give a 10 lakh rupees loan to Tata, and Tata will give you, say, 8% or a 9% return against that loan. That option was not available to retail individual investors. Today, through Giraffe or platform like ours, we talk to these organizations, we understand their debt requirement. For example, say they want a 50 crore loan where they are willing to pay, say, 9% annual return. Now we will underwrite the transaction. We will give that capital using our balance sheet to the organization, say Tata in this case. They will issue a instrument which is called as bond,
Yeah.
and that instrument will capture these details. Okay, the tenor of the instrument says 2 years. You will get 8% annualized return. The return will be in the form of, say, monthly interest or quarterly interest, and the principal will be either quarterly or annually. So the terms of the deal will be mentioned, and this is the security against that. Once that bond is with us, we then sell those bonds onto the platform. So now you as an individual, you'll come to the platform, you can log in, you will see, similarly, you will see multiple types of bonds which are listed. It
Yeah.
could be from a double A rated bond, which is, say, at an 8% IRR, to maybe a triple B rated bond, which is, say, at 14% IRR. So you will see multiple bonds which are listed. You can read about each of the bonds. You can read about the terms. You can read about the security. If you have questions, you can ask our customer care people. You can ask, you will be assigned an RM, so the RM can answer all those questions. Once you are comfortable in investing, you will just select a bond. It is as good as buying a share. You will just, instead of share, you are buying a bond. You will select a bond, whatever amount that you want to invest, you can choose the amount, and the bond gets credited into your demat account, like a share also gets credited into your demat account.
Okay.
So that it comes to your demat account, and then post your investment till the balance tenor of the bond, you start enjoying the returns. So you will either get a monthly interest, you will get a quarterly interest, basis what the bond that you have selected.
Vineet, while all of this looks simple, right? But when you talk about bonds, you get terms like yield, you get terms like coupon, which kind of scares common investors. So I have
Yes.
a follow-up question on this. How do you design UX for something that might be complicated to a novice investor?
Yeah.
Talk to us about some of your work you're doing in the space, like the bond analyzer tool that you launched recently.
Obviously, when we started this, it was a complex problem to solve. But over last 4 5 years, I would say we have cracked this to a large extent, where
Right.
we have simplified this in a manner that it is very, very intuitive for someone to understand. See, although the terms of yield or return might be complex, but the nature is very simple because it's one of the oldest form. It's as
Correct.
simple as that you are giving loan to someone, and that's company is returning your loan with interest in a specified period of time, and that as a concept everyone understands. We have a lot of our investors who are housewives, we have a lot of our investors who are senior citizens, and they understand this very, very easily. From a UI UX angle, what we have also done is that, obviously, we have done lot of, features on our platform where a person can just simply drag and select the amount of investment. They will get to know, what is the kind of interest that they will earn. We also launched two products. One is a bond analyzer, and we have also launched an AI product. We were the first platform to launch AI in the bond space. What it does is that it's as good as you're talking to someone. So you can just go and talk, can you explain me about this bond? What is the monthly return I will get? What
Right.
is the quarterly return I will get? When will I get my money back? Can you compare the five bonds which are listed and make a table and show me in this form? So it is as good as you're talking to someone. This has helped us, reduce lot of conversation which otherwise the customer used to call us for.
Okay.
And it has become very, very intuitive. It has trained itself over last year or so to give right results for a customer query perspective. That is one. The bond analyzer product is, I would say, slightly more for a sophisticated investor, somebody who understands this space well.
Yeah.
That particular investor, for them the AI will be very, very simple. For them, they want slightly more detailed information. They want to compare bonds of the same company which was issued last year. So just again to give a parallel example, in equity market you have a lot of tools where you
Right.
can see what was the share price 1 year back, whether it has moved up or gone down, right? And then you take a call on whether you want to invest in share or not. So similar tool again was not existing in the bond space, and we had to build the thing from scratch, where a sophisticated investor, whatever data that they want to take an informed call, they should have a tool where they can play around that. So bond analyzer as a product fits well for them and for a lot of family offices to take right calls on whether the timing is right, whether the pricing is right, all of that.
Vineet, good thing you brought up the topic of AI.
Yeah.
Just curious about where else are you using AI in the entire product? Is it also playing a critical role in your operations as well?
Yeah. So obviously, see, the first use case for us as a platform for AI was from a customer perspective. Okay. We wanted to use AI so that we can make the lives of our customer easy. That was the starting use case for us.
Right.
Now, what we are doing, obviously, we are, because to use that AI, we have to have first a proper set of like a data warehouse where, the data is correct, because the AI has to read on that particular data to give any result.
Yeah.
So obviously, that once we have this clear set of data, it has helped streamline a lot of our internal operations as well, right? So, for example, suppose tomorrow when the customer needs a repayment, so now we are feeding the data of AI and the customer into our platform, so that tomorrow when if some they call us and they are talking to, say, our customer care or our RM, our system internally has all the data handy and ready to understand the customer, what are the types of products that they like, when is the repayment coming due, when do what is the recommendation that they are seeking, all of those things as well. We are using AI as well. The third thing that we have started using is to train our customer calling feature.
Right.
So we are working with one or two other startups who have built this entire thing. Idea is that once anybody who is calling us or reaching out to us, our call center is trained enough to handle that in a very, very efficient manner.
And Vineet, what's the traction that you started seeing on the platform? Who are your core customers and how are they geographically and demographically distributed?
Yeah. So from a traction perspective, we have today almost 3 odd lakh customers. Okay. And we are seeing good volume coming on a month-on-month basis. Our focus has been on the mass affluent category
Right.
to start with, and that is the core TG as a platform that we focus on. If I have to define that, it would be somebody who is earning maybe 20 lakh plus, 20 30 lakh plus on an annual basis, is something which I would say 70% of our TG would be. Okay. But having said that, what is also happening is that the regulations have shifted in a way where today we can issue bonds which are even denominated at 1,000 rupees,
Hmm.
which was not possible, say, 2 years back. It started with minimum investment of 10 lakhs, then it went to 1 lakh, then it went to 1,000, right? So as and when the regulation is also catching up where we can retailize the product, we will start focusing going mass retail as well. But till date, the focus has been this.
Vineet, it is as if you're reading our mind on the next question that we're going to ask.
Hmm.
But you spoke about regulation. So
Yeah.
can you help us understand? You touched upon it, but can you help us
Hmm.
understand the regulatory aspects that make Giraffe possible and double click on that? I know you touched upon the
Hmm.
licensing that
Yeah.
came up with in 22 to 23. But
Yeah.
if you can do a double click and get us deeper into that.
Yeah, definitely. So see, I'll just go back again. Is that for a platform to distribute or sell bonds in an online manner, there
Right.
was no regulation which was governing this practice. So, like if you have to sell equity, you have the stock broking license. If you have to sell bond, there was no such license when we started the company. And 2022, late 2022 is when the regulator, which is SEBI in this case, they came up with this paper called as online bond platform, where platform like us were given an identity and were given a license to operate this business. This license is fundamentally, it is a like a stock broking license. It's a broking license where you are permitted to sell debt products, and we use this license to do the business that we are currently doing. However, this was the step number one, which wherein the license was granted. Now you had to create an ecosystem. What do I mean by that? Is that suppose tomorrow, as I mentioned, if you are coming to the platform and buying a bond, the bond has to go to your demat account, right?
Right.
Now, for it to go to the demat account, you need a tech integration where NSDL and CDSL are also integrated with it. If that tech integration was not available, traditionally, like even 4 years back, the only way we could send a bond to your demat was by filling a physical form, then send it to the bank, then it goes to your broking account, and then it was getting transferred to the demat account, which was like a 7-day process. Now, but today, in last 2 years itself, it has become similar to what in buying a share is. You buy the share, and by the end, in T plus 1 day, it gets settled into your demat account. Everything is done with a tech interface, right? So obviously NSDL, CDSL, NSC, BSC, all of these players also came together along with us, because the regulator brought all of these players together. All of us work together to ensure that we build an ecosystem which is similar to buying an equity, where the ease of investment is exactly same like you would buy a share. I would give credit to the regulator for bringing all the players together to enable the same.
We need to also talk about your approach to risk, bond curation, and ongoing monitoring as you keep adding issuers to the platform.
See, because we both Saurav and I, we come from like a private equity background and investment background. So internally we have a very strict, I would say, adherence to risk framework
Right.
that we have for selecting the bonds. One of the things that fundamentally we also believe as a platform is that given the product is new and the product is complex, at least at the start, once you start understanding the product is actually very simple product. It's like just giving a loan and getting your return back. What we have done is that across various asset class, say at double A rated level or A rated level or triple B rated, at various asset class, we ourselves have done handpicking of few companies which we feel are doing very well from a risk reward perspective, and
Right.
we get those companies onto the platform, so that for a retail investor, when they come to the platform, they are not bombarded with all the bonds that are available in India. Okay, then they start getting confused ki whether this is good, this is bad. What we try and tell is that we have scanned the market. We feel that in each of these categories, these are the 4 or 5 bonds where the risk reward ratio stacks up very well in favor of the investor, and hence we have bought these companies onto our platform for you guys to invest. That is step number one. Now to do that, obviously, we have a risk team in place which does the thorough analysis of not only the financial statement, of meeting the promoter, of meeting the company, of understanding the business. It gets approved by our internal IC committee before we invest onto that company. Post investment also, there are a lot of conditions or performance monitoring that is done on a monthly basis. We track that very very actively. We look out for any early warning signals in the company, and if we have to exercise any call or put option to get a faster repayment in case say things are going southwards for that company, we
Right.
do exercise that right as well. And this is the way basically we are operating from a risk analysis perspective.
We tend to, towards the end, do some amount of crystal gazing and looking into the future. So,
Yeah,
looking, say, 5 years ahead,
yeah,
what needs to happen for fixed income to scale like mutual funds or equities now?
yeah,
And what role will platforms like Giraffe play and also OBPP in
yeah.
shaping that future?
Sure. So see, the way I see it is that one of the first thing that has to happen is that we should have all the features which are available in equity or mutual fund,
Right.
right? So it started with the ease of doing transaction, which I have already explained that today the ease of doing transaction is similar to what you would buy an equity or mutual fund. Now the next level of evolution will happen is where you will have today we don't have mutual fund of bonds. Okay, what does it mean? It's like buying a basket of say a double A rated bond, or buying like you have a large cap mutual fund, small cap mutual fund, right? You have mid cap mutual fund. Similarly, you should have an baskets of bonds which mimic something similar, where the large cap could be all the bonds which are double A or triple A, the mid cap could be all the bonds which are A rated or triple B plus rated, and all the small cap could be a triple B minus to triple B rated bonds. So all these baskets are now getting created. Okay, that is step number one. Step number two, we should have liquidity similar to what is there in equity today. What does it mean? If say today you are buying a bond and you want to sell it tomorrow, the liquidity should be available so that you can easily exit your position. So now there is a as I mentioned, a entire tech layer being built again between all the players today, where this thing will become active say next maybe a quarter or so, right? So that once liquidity starts coming into the platform, the acceptance of the product will, I would say, skyrocket. The third would be taxation. What does it mean? Again, is that today equity has a favorable taxation. So if you have a capital gain investing in an equity product, the tax for you is lower vis-a-vis you get the same capital gain by investing in a debt product.
Right.
So, in fact, if you would have seen, the chairman of State Bank of India had also suggested in this budget as well, is that to have a favorable tax rule for FDs as well. So, if it comes for FDs, it has to come for bond as well, right? So, what we are trying to say is that in a lot of like developed economies, irrespective of where you get capital gain from, the taxation should be similar. But here we have different taxation slabs if you have a capital gain from say real estate, or if you have a capital gain from equity, or you have a capital gain from debt. So once you have a same capital gain structure or taxation structure irrespective of the product, I think again the acceptance and the number of customer who are willing to invest, or the quantum of investment, all of those things will skyrocket. So I think these three things, if I have to summarize, one is taxation, another would be the entire tech infrastructure layer, and the third would be the liquidity. Yeah.
Vineet, it's been fantastic having you on the show. The way Giraffe is opening up access to fixed income products just shows just how dynamic this entire space is and how it's evolving very, very fast. Thanks for taking the time to walk us through the journey and the road ahead.
Thank you, Hemant. Thanks, Elroy. It was great talking to you guys and revisiting a lot of the fundamental questions that you asked about the bond platform. And we do hope that the platform becomes big, and a lot of people can utilize the benefit of fixed income in their portfolio as well.
Definitely, Vineet. We hope the same as well. To all our listeners, thank you for tuning to another episode of India FinTech Diaries. If you enjoyed this conversation, do subscribe and share, and we'll be back soon with more insight from the world of FinTech. Until next time, stay safe and keep building.